Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 33,965, up 4.07%. Ethereum currently trading at 2164, up 4.38%. We notice the stablecoins USDC, DAI, USDT, and BUSD are basically registering red. That means money is flowing out of the stablecoin into the crypto market. Yesterday there was a lot of fear in the market of a crash, all sorts of things happening. Our community said, I'm going to buy. I'm like an institutional investor. I love the percentage gain. Look what you did. You're an incredible community. I have to say, you're all awesome. I'd just like to let you know, if you're new to the channel, everything I do for you is free. I make my money from the markets. I started this channel because there was a lot of FUD and FOMO spreading in the mass media as well as YouTube. I just wanted to protect people. I've been trading for decades. I just wanted to share my knowledge. I don't have any pay groups, reports, indicators. I don't do anything like that. My focus is just to share what I've learned in the markets to help you to be more of a financial blessing to yourself and those you love. Let's have a look at Rule 209. A couple of people have asked me that are new to the channel, where are all these rules coming from? These come from my many years of trading experience. What each rule does is try to save me money, and because I've written these for myself and they have saved me a lot of money, I'm really sharing my secret playbook with you. Rule 209, institutional is not retail. I see so many people across YouTube applying retail thinking to an institutional mindset. That's really bad. What do I mean by that? Unfortunately, Rule 417 is about abandoning ego. Now, why do we need to do this? Isn't ego healthy? What is ego at all? Let's start with some definitions. I know a lot of people view from throughout the world, so it's really good to get on the same page. Ego is a person's self-importance. When a person acts egotistical or egotistically, they act in a very self-centered manner. There's a little quote, he is selfish, egotistical, and arrogant. But what's arrogant? Arrogant is an exaggerated sense of one's importance or abilities. That's basically people behaving badly, for lack of a better word. Rule 417, abandon ego. This means that we don't behave badly. To be more of a financial blessing to yourself and others, it's really important to get rid of ego. What happens is when we have ego, we become very fixed. Intelligent people look at all the data and say, this must be right. In the markets continuously prove people wrong. We always have to assess probabilities on a day-by-day basis. Albert Einstein was an incredible mind, a theoretical physicist, very well known. He said, knowledge is inversely proportional to ego. Now, what does that mean? Knowledge, the more knowledge you have, the less ego you have. The more ego you have, the less knowledge you have. Stephen Hawking, an incredible mind, a theoretical physicist. Stephen Hawking said, the greatest enemy of knowledge is not ignorance, it is the illusion of knowledge. When we know so much because we don't know much at all, remember that inverse proportionality, we can create an illusion of knowledge. Now that is a really dangerous thing when you are trading and investing. If you get so in love with the position, so fixed in your thinking that it cannot be changed, it's really dangerous to your portfolio. You want to be more of a blessing to yourself and those you love. The most important thing is to understand and get rid of the illusion of knowledge. Every day, 7 days a week, we go through the KSProcess to determine the true trend. It's rule 1112. It's incredibly important. If you don't have the true trend, you will end up making really, really bad decisions that will harm you financially, terribly. As a full-time trader, what I'm focused on is making sure that whatever estimates, whatever behavior is based in reality. There were some really interesting things floating around on Twitter. A couple of people came up with the concept of taking this consolidation phase, which is psychological dawn after the bear market, which is psychological night, and using this dawn and paralleling it to the psychological sunlight of the bull market. It is really quite interesting, and we should always engage in different ideas and different thinking. This particular period of time, I just cloned this line to here, lined it up exactly with the start date of the halving, and it sort of gave an indication where the bull market peak would end. Now, if we look into things like this, we're saying that in the dark, when the rocket was being rebuilt, that period of rebuild is exactly the period of the rally. For me, this violates one of the rules in terms of crossing psychological boundaries, crossing the idea of the law of mathematical consistency. But that's not to mean that we don't look at it, and that's not to mean that it doesn't have validity. We have to always be humble. We have to always look at things. So let's take the next consolidation. This period here, cloned to this white line, changed it. It pretty much aligns with the green sun. So if we bring back the price behavior of the 2016 cycle and put that in green, and we take the bull market cycle, and you remember many episodes we just normalized it by stretching it across, we do that, the price could come anywhere from that green dot above, because we're looking at a kind of an average in between these two cycles for the current price behavior. What I've done here is I put in a black swan event. Now, this is something that is not in the mainstream media or anything like that. I did call it quite a long time ago that we had what I call a liquidity blow off. There was so much money sloshing around in the system that I simply said, this is a liquidity blow off, and it's normalized. The institutions took all that money, that stimulus money, all the excess funds that were sloshing around the economy, they took it out of the market. They're ready to deploy it back in to make it push up in terms of price. At least that's our assumption from what data we've collected. Now, if this is a liquidity blow-off or not will remain to be seen, but I believe it is. That's what I'm labeling it. If we look at this low in this particular cycle and come back to this, we could expect some pretty steep action. Note that I've drawn from the halving. This image here is drawn exactly from the halving. I don't try to fit a graph to reflect what I want it to say. I don't do anything like that. I let the data speak for itself. This is just another piece of logic coming into play that the green sun is probable. I'd just like to say, if you're new, the KS model is a Bitcoin technical trading model based on institutional price psychology. This is actually the live price of Bitcoin in USD, $33,955 or $58.41. It is live. It is not an abstract model. What we've done here is just pretty much break up from the halving psychological blocks. There are three psychological blocks: bull market, bear market, consolidation. It's pretty easy to just think sunlight, darkness, dawn. Sunlight, darkness, dawn. Sunlight, darkness, dawn. Sunlight. There will be darkness and there will be dawn. Unfortunately, there's a lot of commentary in the mass media and of course on YouTube, which tends to reflect news current sentiment about Bitcoin collapsing and all sorts of things. I'd just like to draw this to your attention. We do talk about it each day. If we look at Bitcoin's return over the past 10 years, It's 243,270%. That fares up quite reasonably compared to the 14% 10-year growth in gold and the 232% increase in the S&P 500. If we look year-on-year growth, over the past 10 years, Bitcoin, crypto, you can think crypto in general, grew around 118%, where gold grew 1% and the S&P 500 grew 13%. Many people are calling for a bear market, the end of crypto. It's going to go into darkness. I think these people are thinking from news headlines. They're thinking retail, not institutionally. But why would I say that? Institutions make the news, and they do not think emotionally. They are not swayed by falling prices. They catch the falling knife. They buy on deep red days. They're different from retail investors who tend to get very spooked out whenever the price goes down. This is a technological adoption curve of global internet users in white and crypto users in this color, kind of gold. Crypto is growing at 80% average yearly growth. That is incredible. It is a technology that will impact every single person on the planet. Just moving down here a little bit, you can see where we are now is basically at the same point that the internet was around 1997, even call it mid-1997. We're looking pretty good. This is great stuff. There's a long, long way to go. I'd like to quickly take you through this. All of the world's money and markets in one visualization from the Visual Capitalist. Incredible website. This was published about a year ago on May 27th, 2020. Unfortunately, a lot of people misunderstand what cryptocurrency is. They think it's a currency. It's not. It's a technology. It's the foundation of the next internet. You notice this? $244 billion. Each little block is worth $100 billion. Fascinating, isn't it? Silver, cryptocurrency, military spending, budget deficit, coins, banknotes, Fed balance sheet, gold. If we look through this, we talked about the money supply yesterday, global debt. What I really want to show you is something fascinating. If we look at global wealth, it is so big. It's bigger than anybody really understands. Derivatives are an incredible part of trading. You already know that there are derivatives, futures contracts, options, warrant swaps, forward contracts. You know they exist in the crypto space. The notional value at the high end is $1 quadrillion. That's a lot of money. What we're looking at is the crypto market can take a share of all of this global wealth and also the money that is sloshing around in terms of derivatives in the financial system. There's many cryptocurrencies focusing specifically on derivatives. Let's have a quick look at coin market cap. The current global crypto market cap is $1.41 trillion. If we enter May 27th, 2020, that $244 billion there and $1.41 trillion in there, and we calculate, we get a return of 477.87% over 1.12 years. That's an annualized growth in crypto of nearly 380%. Crypto is growing out of control. It's just done that in 1 year, and it's taken up just a fraction of overall global wealth. People get really confused at a retail level. Bitcoin is a store of value, so therefore it's like gold, silver, that kind of thing. It's actually not. It's a digital asset. It is capable of absorbing so many things, and all the ecosystem that is associated with cryptocurrency is literally a technology. We're going to see this continued growth year on year. Everybody calling for a bear market is leading their people astray. But how can we be sure? We really need to check that. Rule 181, compare the same psychologies. Compare same psychologies means that we're in the bull market. The sunshine, before the peak, after the halving. Before the peak, after the halving. Sunshine, sunshine, sunshine. That's what we're looking for right now. We need to see how it's behaved previously under the same psychological conditions. Let's have a look at the stock to flow ratio. We can see the peak of the 2016 cycle, that green sun. Up here, we look back towards the halving. Here, this peak of the 2012 cycle, the peak looking back towards the halving. We notice, and it's a little bit hard to tell, but it goes from darker green into lighter green here. From darker green into lighter green. Now we look at the current cycle, bull market, compare apples to apples to apples. What does it look like? Darker green. Where is that? Well, it could be there, it could be there, it could be there, it could be there. It's really hard to tell with the stock to flow model, but it's going up. When people are new to investing and trading, they think that price kind of is this incredible independent thing and it just moves around independently of how people think and feel. It's not true. Price is a reflection of crowd psychology. In the Bitcoin and crypto market, because of its nature as an exponential asset, when we look back at the previous cycle, the green sun 2016 cycle, we're looking for euphoria, blow off top. Here, when we look back at the blue sun, the 2012 cycle from the halving, not 2012, this is a peak in 2013. We talk about the whole cycle. We can see this euphoria. There were two euphoria waves. The question is, in the current cycle, we've compared the right psychological aspects. Do we have any euphoria? No, we don't have euphoria. We need to get euphoria. Do you realize it's really interesting that people don't really understand capitulation? You know, this blow off top, and this blow off bottom, they are inverses of each other. Capitulation is the exact end of the bear market. The euphoria is the end of the bull market. The capitulation is the end of the bear market. Euphoria and capitulation hammer in very important parts of the overall crypto market psychology. Let's have a look at the realized cap hodl waves for Bitcoin. The peak green sun 2016 halving cycle, the peak here of the blue sun 2012 halving cycle. We notice that there's like a little claw that happens here. One, two, three claws. We notice here 1, 2, 3 claws as well. We go back to the current cycle in the area it's in. 1 claw. We need 2 more. It is the exponential nature of Bitcoin and cryptocurrencies. A lot of people say, oh, we don't need 2 more. This time could be different. I'm afraid not. It's not different because the crowd psychology from an institutional level will recreate this mania. They're banking on it. After having worked at top levels in billion-dollar companies, I know how they think. They will make sure this pattern repeats. Let's have a look at the Bitcoin hash ribbon. Going back to the previous cycle, the 2016 cycle from the halving, we look at all this white space down to the halving. Just notice it's very white before it and very white after it. Let's go back to the previous blue sun cycle, 2012. You can see white before and white after. Now, we look at the current area. We're using our critical thinking skills. We see that there is a peak, there's this massive red, and that's really about the China miner issue. But let's look back and see where the red occurred. Back here. Okay, what are we Also notice there's not a lot of white here before this red ribbon. You see all of this white? You see all of this white. But what about after the peak? There's a whole lot of white and a whole lot of white. We just don't see this. We're just getting started. This is why it's really important to just parallel your critical thinking skills when you look at any particular diagram. We can say from that analysis, we're pretty happy that things are just chugging along and nothing major has come in to upset things. But Rule 193, check the stock markets. How are the stock markets performing? If they're going down, if there's some problem, we need to be aware. Tam reached out to me and said, Ken, what do you think of this Delta variant? What's happening there? Could that be a potential black swan? Let's have a look at that. Let's dig deeper. The SARS-CoV-2 Delta variant cases worldwide. We can see that the majority of those are in the UK, India, USA, quite small compared with the United Kingdom. That doesn't mean that they will stay small. Just looking through it, at the moment, July 9, there are 108,527 cases of SARS-CoV-2. It is very infectious. We need to keep our eye on it. The reason I don't think that this will be a black swan, the world is prepared. We have all the infrastructure in place. It's quite helpful to know that as far as COVID-19, there are 186 million cases worldwide. 16 million are still active. A lot of people think it's all over. It's not all over. It's really still there, and it's causing bumps along the path. But vaccines are coming out. We're getting vaccines and immunization across different countries. It's taking time, but we're getting there. All the governments throughout the world know that they have to address this. It's a really big issue. The fortunate thing is that we've seen a lot of technological adoption to allow us to keep working where we can. In this particular aspect of our market analysis to understand true trend, we look at the US market because it leads the world. Whatever happens in the US stock exchanges gets reflected across all other stock exchanges. Not necessarily identically, but if the US market goes down, it takes everything with it. It's really important to understand that. When many people are new to trading and investing, they think that the US market, if they're in another market, they think that it really doesn't matter. Believe me, it matters. So let's check out how the major indices are going. This is our global pulse. We can see this uptrend in the NASDAQ 100. We know, I believe, that is too far extended. I believe that that will come down. And that's from there to there is about 7% roughly. I think that people will call the end of the world as this price, which is always moving in a wave, up and down, up and down, up. Of course it's going to come down. I think you will get so much FUD. It is unbelievable. That's why I put this section together for you, to immunize you against that. We can see the S&P 500 is retracing. That's good. That's healthy. That's what we want. Everything looks constructive there. The Russell 2000, it's looking fine. You'll notice that the price of Bitcoin is superimposed in the background. I want to make sure you can look at how an indice and how Bitcoin relate to each other. Let's have a look at the Dow Jones. It's in an uptrend. It's a little bit weaker, but it's making new highs. It's okay. One thing the community really likes to look at is the price action of particularly important cryptos, such as miners, trusts, etc. So we go through all of those here. If you have any more that you would like to add, please let me know. If it's sufficiently large enough, it needs to be large enough to not distort price movement and be predictive. I will include it, absolutely. Grayscale's Bitcoin Trust, you can see, is still under resistance. Let's have a look at the Bitcoin Fund in Canada. Same thing, it's still under resistance. You can see it's tracking the price really of Bitcoin very well. Let's look at Coinbase. Coinbase has not got a lot of trading activity, but we can see it's already over resistance. Let's have a look at ARK Innovation Fund. Now we're starting to see under the hood a resistance. It's crossed over and it's now trading at support. It came down, moved in a wave, hit support and bounced. Let's have a look at Galaxy Digital. We can see this resistance has been overcome, turned to support. We've got a secondary resistance. It's just seeking to turn that support. This is a low, this is a higher low. There's a trend developing here. That's looking pretty cool. MicroStrategy. This resistance now turned to support, an up channel of support. It's doing well. Price always moves in a wave. You know it's always going up and down. Let's have a look at Riot Blockchain. Resistance here, turned to support, has a good amount of upward support. It's doing well. Let's have a look at Marathon Digital Holdings. Resistance, pass through that resistance, turn to support, up channel of support. Oh, looking pretty damn good. Hive Blockchain Technologies. Resistance, turned the resistance to support. Little bit of weakness here, but it is still in an uptrend. Let's have a look at Bitfarms. Bitfarms, a little bit of a different perspective on this. Resistance here and support here. When we look across the other stocks, we understand which way it's going. We would expect a breakout, a retest and a resumption off there. Argo Blockchain. This resistance has been passed, turned into support, consolidation. It's about to move up. Let's check out gold. Gold has this very heavy amount of resistance above. It broke through it, tried to turn it into support, came down for the retest and failed. It's coming up, testing that resistance. It's backing away. If we look at silver, silver has got a fairly good uptrend there. It's looking healthy. Gold and silver are both looking healthy. We look at the VIX for volatility. The volatility has declined substantially. We look at the DXY. The DXY has retreated from that resistance line we talk about. Let's have a look at the 10-year Treasury note yield. I was explaining that I believe what happened was that there was the FOMC meeting and people were doing shorts, expecting some kind of trade that didn't happen. The best understanding that I could pull out of the market was the unwinding of short positions. Everyone went short, sold, and then they said, oh, this is not happening, and they're recovering. Now, we need to keep our eye on this, but I think all pretty healthy. We can see that the 30-year has recovered to that support now. Let's look at the TLT, the Treasury bond. We can see it's coming down. I think there was an expectation in the market of one thing that would occur and something else occurred. I think that's all it really was. But we need to keep our eye on it. Just to round out this analysis, looking at the 7 to 10-year Treasury bond, it's coming down. Let's look at the utility sector. It's still upward support, hasn't broken resistance. Let's look at oil. Oil still in an uptrend. That's like crude. Let's look at Brent, still in an uptrend. I'd like to take you a little bit deeper into this global business cycle from Fidelity. Have a look at this. This is really interesting. This is the United States, Q3 2020, Q4, Q1, Q2. It's showing you what the recovery has been like. The US in Q3 was in contraction. It's coming out. Q3 and then Q4, Q2. It's in early stages of recovery. It's not towards expansion yet, and definitely a long way away from contraction. if we look through these different markets, what we're seeing is that expansion is on the way. We've come out of contraction as a world. Things will heat up. Things will get better. It's just really interesting to share this with you. We're not in contraction. We're out of contraction. We're recovering. We haven't even got even close to midway recovering. So at least for a couple of quarters, we would expect everything to continue as is. I hope that's helped. I hope you found the content useful. Everything I do for you is free. Please be aware of scammers. I do these videos to assist you to be more of a financial blessing to yourself and those you love. I hope it's helped. I always love to hear from the community. If you have any questions, please reach out to me in the comments, or you can always direct message me on Twitter. If you would like twice daily updates, 7 days a week on movements in the crypto market, please subscribe to YouTube and follow me on Twitter. Crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Take care and see you next time. Bye for now.